All righty. Good morning, everybody. This is David Grossklaus of Dorsey and Whitney. I show that we're at 10 o'clock. Um, so we'll go ahead and get started here. A fair amount to cover, and I would not want to shortchange my colleagues, James Smith or Jennifer Block, with regard to their portions of the presentation. So welcome, everybody. This is the Dorsey now annual training for 2024. The topic is the municipal securities disclosure. Hopefully you all see on your screen, and Jennifer will be scrolling through the content of the materials. Welcome on a beautiful early April day. A few housekeeping matters. We'll try to keep the program to 60 minutes. At the end of the program, we will have try to leave some time and have questions and answers. To the extent that you have any questions, you can see there. Please email those to Mr. Smith. His email address is smith.james@dorsey.com. We would ask that at the end you provide a completed attendance form and return that to us. That does help us track who's attending. And then, as always, to the extent there are topics that you might like us to cover in subsequent webinars, please always provide that feedback. It's helpful to us to know what people are thinking and what they may be interested in having us discuss with them. So with that, I've already mentioned Mr. Smith and Jennifer. We'll cover an agenda today that will be disclosure basics. We'll talk a little bit about the role of the SEC. Jennifer will talk about policies and procedures, and as I said, a question and answer forum. Let's start as a reminder with a glossary of terms. Hopefully, most people will be familiar with these terms, rather common. You will hear me and others in this presentation use acronyms and other short word versions. So let's just walk through this quickly. Parties, again, to a transaction on a normal financing, you have an issuer who would be the governmental entities. Sometimes you would also have a borrower that might be different than the governmental entity, but for all intents and purposes, the borrowing entity will be the issuer governmental entity. An underwriter is the entity that would purchase the bonds and then generally immediately turn around and resell those bonds out into the marketplace. Municipal advisor is an advisor that represents the issuer or governmental entity to advise with regard to all matters for that issuer with respect to financial matters. The SEC is the Federal and Exchange Commission. I will just quickly note, I will sometimes refer to the IRS as we approach tax day. I think everybody knows who the IRS is. And then lastly, a dissemination agent to the extent and following the issuance of bonds, most of you have hired a dissemination agent. That's an entity that will submit your annual filings that are required to be filed pursuant to your continuing disclosure requirements with EMA, the electronic municipal system. I'll just quickly say, to the extent you haven't or aren't familiar with regard to your governmental entity, I would urge you to take a look on EMA just to see what has been filed on your behalf and to be familiar with the EMA system. It's now quite an easy system. And you can see the link there under the documents section, emma.msrb.org. Documents I'll be referring to the POS and the OS. The POS is the preliminary official statement. That is the document that gets prepared that is then used to go market the bonds. The official statement is the document that then will have added to it the financial aspects and terms based on pricing at which point the numbers are no longer preliminary but final. Continuing disclosure certificate, I alluded to, that is the certificate that prescribes what you're required pursuant to Rule 15C212 to provide annual updated information on Emma. Your dissemination agent agreement is then the agreement that you have with your dissemination agent that sets forth the parameters and the contractual obligations pursuant to which they will file that information for you on Emma. I will just say it is not required that you have a dissemination agent, and we do have certain clients that are comfortable and do file their own information on Emma directly. So the fact that you may not have a dissemination agent agreement, it's not a requirement. It's just something that most people choose to do to make sure that their information does get timely filed. And it can be important if you have turnover in certain aspects of personnel within your organization. Let's talk briefly about the role of counsel. Bond counsel, generally considered the counsel that would be drafting all the documents and ultimately be giving an opinion with regard to federal tax exemption. So the focus of bond counsel in the transaction is tax. Bond counsel assesses the tax qualifications, prepares all the documents that you see listed there, ultimately delivers an opinion that the bonds have been validly and legally issued, are enforceable, and then usually to the extent the bonds are expected to be or are tax exempt, would also deliver an opinion stating such. Disclosure counsel also usually represents the governmental entity. As disclosure counsel, the role is now to be focused on the matters that are topical for this presentation, which are the securities rules, both issuance of the securities and dealing with post-closure secondary disclosure of that is continuing disclosure. Disclosure counsel will generally be the entity to prepare the official statement or the POS. As part of that process, disclosure counsel assesses risks, prepares the POS and the OS, reviews and prepares sometimes the continuing disclosure certificate. Sometimes that is prepared by bond counsel. Ultimately, the process or role of disclosure counsel is to provide to the issuer a 10b5 opinion. 10b5, again, is a securities law-related opinion. Keep in mind, as part of this entire process, financial information, while gathered, is ultimately the responsibility of the issuer. I'm sorry, I was sidetracked because there was a webinar chat. Let me go back a minute. So again, financial information is information of the issuer. It is crucial that the issuer always understand that no matter who is preparing or gathering that information, the accuracy of that information is ultimately the responsibility of the issuer. Moving on, next, I'll talk just briefly about underwriters counsel. So depending on the structure of the transaction, it can be warranted for the underwriter to hire separate counsel. In that case, there will be a negotiation of the transaction. There's also an assessment of risk by the underwriters counsel, akin to disclosure counsel, related to ultimately, again, giving an opinion of 10b5. Generally, underwriters counsel will give the opinion, their 10b5 opinion, to the underwriter. They can also address their opinion to other parties to the transaction. As I just stated with disclosure counsel, underwriters counsel does not prepare or confirm the financial information. So if you were to see an opinion of disclosure counsel or underwriters counsel, there will specifically be statements that confirm that indeed the financial information of the issuer has not been confirmed by counsel. That, again, is the role of the issuer to make sure that that financial information is correct. I'll talk just a minute next about the opinions of counsel and other professionals. So it is now more common than not to see disclosure counsel along with bond counsel. And then, as I said, occasionally underwriters counsel, depending on the structure of the transaction. Opinions and addressees to opinions of counsel are always dependent on engagement letter and clients and potentially negotiation that would be set forth in a bond purchase agreement on a negotiated transaction with underwriters counsel as to who opinions might be addressed to. There's not a set methodology. There are customs, so that normally bond and disclosure counsel would be addressing their opinions to the issuer, perhaps other parties to the transaction, depending on structure. Generally, underwriters counsel will be addressing their opinions to the underwriter. Again, no absolutes with regard to that. That's just sort of custom and ultimately all driven by negotiation and by structure of the transaction. Other professionals involved in the financing. Again, just because you may, as a governmental entity, hire professionals such as a municipal advisor, an underwriter, bond counsel, disclosure counsel, so on and so forth. The ultimate content of the official statement is always ultimately the responsibility of the issuer. The professionals you hire are there to help you make sure that you are providing the appropriate information in the appropriate manner. But fundamentally, and I'll talk about this later, and the purpose for the due diligence process is that you provide to all the professionals accurate information, and or you're constantly reviewing that information both at the level of staff and ultimately your governing body, whether it's a city council or a board of supervisors, and confirming that when that offering document or POS is printed and goes to the public, that the information within that is deemed as accurate by the governmental entity. I'm going to switch gears here just for a minute and talk about the regulatory framework and why we go through all of these exercises. So keep in mind that when a governmental issuer issues debt, if it's being issued to the market, you're actually issuing a security. So no different than stock or any other debt instrument that is going to the public. As a result, the 33 Act and the 34 Act apply, and thus also Rule 10b-5 is applicable. Again, Rule 10b-5 in its most basic form is a provision that requires that all the documentation in the preliminary official statement that goes to the market is accurate, and most importantly, or as important, is that there's no omission to state material information. So I'll skip ahead. At some point, we'll talk a little more about due diligence, but essentially and ultimately, the purpose of the due diligence process is twofold. One, to make sure that all the statements that are material within the offering document are accurate. And number two, and I would argue one of the core essences of due diligence is to make sure we're not omitting to state a material fact. And I'll talk about that a little bit further down the road, but that's the reason that if you see our due diligence questionnaires, we may ask the same question in about 3 or 4 different ways. We're just trying to make completely sure that we haven't asked a question in a manner that may not elicit an appropriate response for information that indeed we would want to know and at least vet to determine whether it's material and thus whether we need to state it. Again, all driving toward making sure we don't omit to state a material fact. Next slide, disclosure rules. So the next rule is 15C212. This is continuing disclosure, or what I would refer to as post-closing disclosure. So this is the document that's governed or referred to as the continuing disclosure agreement. This is the document where you set forth the financial information that was included in the official statement and for which you're required to provide an annual and ongoing information on Emma up to the point in time that your bonds are defeased. And so this is an important document, both in terms of making sure that it's understood that the information that you're going to be putting into or be required to provide is information that you'll be continuing to have available to you and be producing, and then also making sure that it gets filed on Emma on a timely basis. We'll talk a little bit later about material event notices. Those are notices, or those are provisions rather, that are prescribed by 15C212, and they are events that if they occur, even after you've closed the bonds, you're required to provide that information on the Emma system to let investors know. This all ultimately deals with what we would refer to as secondary disclosure. This is a very different market than we used to operate in. Now it's equally as important as the primary market when you initially sell the bonds. You would not know, but now in the secondary market, your bonds may be traded many times over, depending on the needs of investors. That's kind of a new phenomenon, but again, it's no different than corporation stock, where different owners of stock are constantly changing. Nowadays, your bonds may be traded multiple times well after you've closed your transaction. Again, the focus of material event notices is to try to provide those types of events which would be deemed material to investors. As always, any filings with regard to material event notices should be vetted very, very diligently, because the anti-fraud rules still apply. So you may think that you've done yourself to be, or deemed yourself to be in compliance. Keep in mind that when you file even a material event, that material event is subject to anti-fraud rules. So it's two-part. It's recognizing that the material event has occurred, timely filing within 10 business days of the event, and then making sure that that material event notice is compliant pursuant to anti-fraud rules. Very quickly, you can see here the listed events under 15C212. I won't go through each of these in the interest of time. Note that for many of them, there is a materiality threshold. To the extent you ever have questions about whether an event that might fall within these is material, never hesitate to give us a call. We will help you determine whether we believe it's a material event. I'll quickly point out one item that occasionally catches folks, number 11, rating changes. So if you have a positive rating change, in other words, your rating improves, that is actually a material event for which you should file. I'll then just quickly point out events 15 and 16. I sometimes consider them to be new, that those rules were actually added and effective on February of 2019, so now not so new. These do, though, require you to provide a material event notice to the extent you enter into a material financial obligation, or to the extent you take action that would indicate financial difficulties under number 16. I'm going to move then to disclosure considerations, Jennifer. Things that are considered as we put together the documents. Again, these are structural items, but type of security for the bond. So obviously an offering document for a general obligation indebtedness is going to look different than a utility revenue, which will look different than sales tax, tax increment, save, and road use. You see there sort of the general types of issuances that we run into. Obviously, the security is the repayment, and the repayment is the flow of funds, and it is the flow of funds that ultimately drives many of the disclosure risks that we talk about. Disclosure risks are the types of things that might cause the issuer an inability to repay its debt. I would just say that there are now several issues or disclosure considerations that we would now, based on SEC pronouncements, almost deem as mandatory. Those would be cybersecurity, pension discussion, and in some way, shape, or form, matters with regard to environment, climate types of issues. So the SEC has just recently on the corporate side announced a much stronger look and a requirement that matters with regard to climate or environment or disaster type of situations be drafted and viewed in a much more direct or singular fashion with respect to that particular financing. All right, I'm going to try to move along here very quickly. The due diligence process, again, I've touched on this. I know it is the process that takes us to the point of being able to give our 10b5 opinion. It is the process pursuant to which you receive the due diligence questionnaire. We ask you to provide a whole lot of information, whether it be written or general information that you otherwise have at your fingertips. Obviously, financial information as well. The process would be to provide a due diligence questionnaire, receive the answers, and then proximate to the date of pricing, so that there's not a big gap such that an event could occur that would change any of the answers or any of the disclosure to be provided. We have a due diligence call in which we probe to some extent the answers we receive to the questions and give the entire finance team the ability to have a give and take or back and forth or verbal discussion about both the contents of the official statement and the answers to the due diligence questionnaires. Again, all probing the concept of making sure we're providing any material statements in an accurate fashion under 10b5 and not omitting any material statements. I think I've covered the other items on the next slide in an indirect fashion. I'll just leave my portion of this again with the overarching concept that to the extent you have any questions about materiality, or to the extent you have any questions about materiality with regard to continuing disclosure, please don't hesitate to give us a call. And we can, I think, fairly quickly fashion an answer. So whether that includes material event notices or what have you, it's always better to ask the question timely than to try to deal with something at a later date. That's an overview. Hopefully for most of you, this is old hat. and repetitive from prior years?
My part of the presentation is to walk through a little bit of the SEC role and what we're hearing and paying attention to from the SEC that informs our work on the municipal side. First up, a refresher. I know we've had this on here for a while, but it's always important to start with when issuers are speaking to the market. That can be done in a variety of ways. And the anti-fraud rules that Dave talked about apply to those statements if there's a reasonable chance that those statements might reach investors. So we're thinking about here things outside of the normal primary offering document, outside of the official statement, and then outside of the continuing disclosure filings. There are other ways that issuers can speak to the market and do speak to the market. And the big picture thing to remember here is, of course, all of that information that is shared needs to be accurate and not materially misleading, whether it's on a website, filings with other governmental bodies, or even statements by elected officials, perhaps. Those are all things that can be looked at by investors as speaking to the issuer's situation. A few quick summaries of some relatively recent enforcement actions that are always good to keep in mind, and also, guides why we ask all the questions on the disclosure side and the diligence process. The one on the slide now is a school district from 2021. And in that case, the SEC said that the school district and its now former CFO used stale and misleading financial information. And so in Iowa and probably in other places, we know there are some timing issues from year to year on getting an audit done in a timely manner, which may impact the ability or the timing of doing bond transactions, or we're doing a bond transaction with an old audit instead of maybe the most current fiscal year audit. So when we look at this SEC order against the school district, it helps us keep in mind that we might have old financial statements, but we have to make sure that nothing significant has changed in the interim. Let's go to the next one, which is also, I think, similar. So another example of false and misleading statements in an official statement, again, with a school district. I think that's the SEC likes to look at school districts. There's one here in a couple slides. It's another school district. But the same thing is the big picture concept of making sure that the information in the official statement, and here specifically the financial statements, are indeed accurate and correct. And you can see there are instances here where the CFO has had to pay penalties out of pocket as part of the settlement. And in this case, the auditor also was called to task. Here's an example against a relatively small city in Louisiana. And this transaction was for sewer and water financings for the city. And as part of the transaction, the city had to get approval from a state body, and they provided, according to the SEC, misleading projections to get that approval. And that then flows through to their bond transaction. And the SEC came back later and said, you can't obviously issue debt based on false and misleading financial projections. And again, we have an example where they went after the mayor and also the financial advisor in that case. And then the last one of our examples is, again, another school district, and this one in New York. And this is where the audit was not quite ready, and the district had financial challenges, and the CFO was alleged by the SEC to have not included the most recent information, which would have been unfavorable financial information when offering the new bonds. And so in that manner, of course, the investors don't have the full picture of the financial position of the district. And not surprisingly, the SEC says that's not appropriate, which is the correct answer. The The last slide that I will work through here is switching gears a little bit from the enforcement side to what is the SEC telling us is coming down the road, or in some cases is already here in the municipal world. So these are pronouncements that the SEC applies to the public world, the public companies, which they can and do directly regulate. The way this comes to the municipal world is by the anti-fraud provisions that Dave talked about earlier. And we take guidance from what the SEC tells us in the corporate world as what they think is important to investors in the municipal world as well. So the first up on the cybersecurity side that Dave talked a little bit about earlier, there are clear indications that investors want to know cybersecurity related information about issuers. There's a couple of aspects of this that we think about. One, away from any particular bond issue, if there's a cybersecurity incident for an issuer, we think about whether to voluntarily disclose that or not, and that's the discussion. It's not a requirement, but it's the discussion as to whether an issuer would want to voluntarily disclose that information on EMA. If so, first of all, you have to determine that it was material. So you don't just disclose every cyber incident, because not all of them are indeed material. But the key is to have that discussion with your counsel and walk through whether it's material and then whether there should be a filing away from any bond deal. The second side that we think about is if you were working on a bond transaction and on your official statement, there are a few different ways that we handle cybersecurity. One, we would then be talking about, have you had an incident in the last few years? And if so, what should be disclosed about that incident if it was material? The second piece of the cybersecurity disclosure in an offering document really talks about the process you as an issuer might have to identify incidents, to identify risks, and how to respond and manage those risks. And what the SEC is telling us is investors do think that is important information, that the investors can understand any particular issuer's approach to cybersecurity matters. So that's the key, and we're seeing more about that. And so less standard sort of boilerplate disclosure, and maybe digging a little bit more as to each issuer in each deal, how cybersecurity might impact that transaction. The last piece is climate related matters. And again, this is a relatively, the SEC has been requiring this of the corporate world for some time, and put in place new rules, or is trying to put in place new rules in early March to the corporate world. And there was an 880 some page announcement for those rules in the corporate world, which gives us, of course, a lot to work with as far as what the SEC thinks might be material to investors on the climate side. Again, it doesn't apply directly to municipal issuers, other than informing if there's a material risk for a transaction on climate or environmental side that should be talked about or disclosed. If you think about a city general obligation deal paid by property taxes, maybe not a whole lot in the climate world to worry about or disclose. Maybe a different story if it's a revenue producing enterprise located near a river that floods frequently. That's a completely different story, and so maybe different disclosure surrounding that other aspect. So with that, I think my piece is done, and I'll turn it over to Jennifer to walk through policies and procedures.
Thanks, James. We'll walk through a few things that ought to be familiar to you folks with a Dorsey continuing disclosure policy and procedure document. But again, this training session today that you've tuned in for goes to satisfy your annual training requirement. And we hope that there are a few pieces that you've picked up along the way that were either refreshers or some new pieces. So those are the subjects that I'm going to walk through with you. And as you know, those policies and procedures, they have those three different components: the new bond offering, the continuing disclosure piece, Dave talked about that as kind of our secondary trading market, and then the regular training. And so an annual training, and then training at other key points when you've got some turnover at your office. So one of the things that we like to do as we're working with issuers on a deal, and with your financial professionals that are engaged, is kind of walking through and having a good timeline. And so part of that timeline that is as important as kind of those pricing dates and those other pieces relate to the review of that offering document. And so you are used to getting messages from us like, hey, here's your first draft of your preliminary official statement, please review and send comments. And then we also attach and include one of those due diligence questionnaires that Dave talked about, where we're trying to vet the information that we have in that first draft, and make sure that we can get that tidied up with whatever changes might be needed, so that it's materially accurate and hasn't omitted any material information. So there's the drafting piece of it, and then the really critical piece. And so you probably have gotten reminder emails, or maybe even a phone call just asking for that step 3, that that sign off, because as we've been emphasizing, that those offering documents really are those statements of the issuer. So we just want to make sure that those pieces are good to go from the issuer's point of view. Continuing disclosure is one of those pieces. Sometimes I describe it as the city's or issuer's report card. And so for the prior 5 years, we need to include a statement in that offering document that reflects how the issuer has performed on its existing continuing disclosure obligations. So were all those filings timely? Was something maybe late, or was something missed altogether? That's something then that has to go into that offering document. And so we work very carefully to review those filings that are on Emma, and we'll talk a little bit about Emma here in a few minutes, and then make sure that we've given an accurate description of how those filings had been given to the posting site. And then additionally, making sure that everybody within the issuing group has time to review those documents, and that plays into that timeline that we first talked about. Once we get that initial offering out to market, we have those ongoing disclosure requirements. Those are all described in great detail in your continuing disclosure certificate, or perhaps it's captioned as an agreement, depending on the financing project. But we've got those pieces. I usually describe it as we've got 2 buckets. We've got our known items, and then we have some kind of unknown. So within that continuing disclosure agreement, there are pieces that and you plan about, and so your audit's going to get filed every year, and that there were certain tables that you helped prepare that describe financial and operating data of the issuing body, and some of those are deemed to be of such significance that while those bonds are outstanding, that information needs to be refreshed. So that's what you plan for, and that you need to start gathering information at certain times and get that ready. But then, as Dave talked about, we've got that list of 16 items, and those are the kind of unknowns, but you need to be aware of them. So, like Dave said, that rating change, that can trip people up. So even when your rating gets elevated, that is something that would trigger filing on Emma. Additionally, if the issuer goes and maybe gets a bank loan rather than a public financing to pay for some kind of a project, that's when we need to start looking at, do we have reason to make a filing on Emma for a material event for financial obligations? And so that's where we talk about, well, what's the scope, how much is it, and how does that relate to the city's overall budget and things like that. So trying to assess the materiality, and then remember, those 16 items have to get filed within 10 business days. So it can move along pretty quickly, and usually those issuers are the first line of defense. So Dorsey's always happy to help you with that. Your financial, professionals that you've engaged are happy to help. But some of those, none of us will know before the issuer. So you just really have to stay in tune with what's coming your way, and don't be shy to raise your hand and ask for help. And so, if you've got a dissemination agent, they're always happy to work through those pieces with you. But again, it's still ultimately the city's responsibility, or the government body. So talked a little bit about this piece in terms of who's responsible for your compliance. So those policies and procedures identify someone as a disclosure officer. And so those, hopefully anyone who's identified as a disclosure officer is listening today, or will listen to this later when the recording is available. But they also need to be very much in tune with those continuing disclosure obligations. Within those policies, when we prepare them, we usually put together some tables at the end, and that's just to kind of be a useful guide if it's helpful to you, to track your outstanding bond issues. And so there's one table that identifies and lists all of your outstanding bonds, and then there's some secondary tables that go into greater detail that actually identify and list what are those separate tables that need to be provided and updated on an annual basis in terms of operating and financial data of the city or issuer. And there is an option on the Emma website that you can even input certain information, and you can register to get reminder emails, which I don't know, I like talking about having a belt and suspenders approach, because if it's on the issuer's internal calendar that they need to be watching for things, and it's also on your dissemination agent's calendar, if you've got multiple parties kind of working together to make sure that those filings are met and that are submitted on a timely basis, then I feel like that's a good way to handle things. So this one just kind of identifies what you might consider in terms of putting dates down on your calendar, and how you can work with your financial professionals to get that information gathered on a timely basis, reviewed and submitted in a timely fashion. Again, just because it's important, we've included a list of those 16 items again for you folks to make sure that you're familiar and watching out for the occurrence of any of those. So one of the pieces, and we've touched on it a little bit, audits seem to be getting completed. Auditors are kind of backed up, it feels like, and so making sure that appropriate actions are taken when your audit is not going to be ready in time for your annual filing. And so there are mechanisms that we can work with you. You can file some unaudited information, something that says, hey, we know we've got an obligation here. We can't meet it, but here's what we're going to offer in the meantime. And then once those audits are in fact completed and approved, then you really need to get focused on getting that filed very, very promptly. So the third part of those Dorsey policies and procedures relate to the training. And like I said, here's your annual training. And so I know that it's been put in the chat that if you want a certificate of attendance, or if you're an attorney and you're looking for continuing legal ed credit, make sure you follow the instructions in the chat or in your welcome email, so that you can get a certificate of attendance that you can put in the file to show that you've satisfied your training requirement. And if you watch this later on recording, I think you can put some notes in the file, or include your slide deck, because that's also available. But then as you have staff changes, it's always a good idea to walk through the importance of the continuing disclosure obligations. And then with whether it's your city council, your board of supervisors, like every 2 years, make sure you're doing some kind of a training with those folks who are signing off on those offering documents. The other piece of that is when Dorsey sends out those preliminary official statements for your review. We've got a pretty slick, like 2-page securities law summary PDF. And so that's also a handy reference that can be used with your governing bodies, or if there's particular slides from today's presentation that you think are really instructive or helpful for those folks, or if you've received particular questions from your counsel or your board, you can handpick different items that you might find useful for them to share. And as we've said, these are still the responsibility of the issuer. So it's a good idea to poke around on the EMMA website and see what's been filed. So this is a screenshot of what the EMMA website looks like. If you haven't been there, I would encourage you to go and check it out. You can search EMMA a number of different ways. So even if we go back here, you can, up in the upper right corner, you can search by a QSIP, or you can even just type something in there, or right below that search box is the advanced search option. Alternatively, you can even click on a state in that map and start a search that way. This is what the advanced search screen looks like. And here we've done an example with our good friends in Grimes. They've agreed to let us use them as an example here. But you can see that in the state section, we've selected Iowa, and we've selected and input the issuer name as Grimes. This would be kind of a sampling of the information that comes up once we run that search. So it's a listing of just some of their outstanding bonds. And then if we click on the tab at the top that shows what are their financial disclosures, this is a listing, and you can change based on that toggle how many results that you show at a time. This is a listing of all of their audited information, as well as that annual financial and operating data. And if you click in the disclosure document column, that shows you the actual document that is provided. And then the next one is just an example of what are their event-based disclosures. So here are filings that would be responsive to those items 1 through 16. And as you can see, they've filed, several financial obligations. They've filed bond calls. They had a change of their tender agent back in 2019. And so that also necessitated a filing, and that was posted on EMMA. So if you want to kind of drill down and look at a particular bond offering, if we go back to one of those earlier slides and you choose and want to look at their 2020A GO corporate purpose bonds, this is kind of a sampling of what you would see. And kind of in the middle of the page where you see final scale, official statement, those different tabs provide different pieces of information. And so if you choose the official statement, then you can actually download and look at the final official statement for any of the issues, and you can see the information that was provided there. But as we go to the next slide, we're going to look at what they have filed for continuing disclosure. And so here are pieces of, oops, wrong way. Pieces of information that had been filed with the continuing disclosure. So on the left-hand side are the like the audits and the audited, the information for financial and operating data. And then on the right side, just kind of put some side by side there. Those are those event notices, again, items 1 through 16. So kind of bringing this full circle. So we've talked about that initial offering, we're reviewing, we're sending comments, we're getting things final. People are sending an email saying, hey, I'm signed off, or I'm signed off if you make this one other change. And then we get the preliminary official done, the issue goes to pricing, and then we do a similar process. It's a lot, probably more truncated and a little bit faster, but going to the final official statement, where the changes between that preliminary document and the final document really just reflect those pricing updates. And so again, we circulate, we ask for sign off, and then those are ultimately the official statements that get posted on EMMA. But within those documents, there's a continuing disclosure section. And so you can see the highlighted text at the bottom, given the state of affairs and Grimes. When we pulled this example together, they had like a good report card, clean bill of health. So, that's how their language appeared in that official statement from 2020, I believe. But, had there been late filings or missed filings, that information would have been explained in that continuing disclosure section that would kind of live and breathe in that official statement for us, while that people can look at that at any time. So moving here, so just kind of keeping in mind disclosure, the importance of disclosure, wanting to make sure that you've got a good compliance process in place. Keep an eye on those policies and procedures, take time to review documents, and just again, as James walked through all of those enforcement actions, some of those school districts were very small. That Louisiana town was very, very small. So regulators are watching, and so we just want to make sure that we're working with you and helping the best way that we can to ensure things are going smoothly. Because even though it's great to see all of your issuer names in the paper for like exciting things, nobody wants to find their name in the paper for disclosure that went wrong. So anyway, we'll turn it over and see what kind of questions have come in. James or Dave, if you have other final thoughts here, wanted to check in.
We do have a couple of questions, and so the first one I'll send your way, Jennifer.
Okay.
It's a question about the training and thinking about it for board or council members who obviously have a role in the organization, but they're not, on the day-to-day work like finance staff or a city manager might be. So what kind of training would be good for the board and council members?
Yeah, so I think walking through that disclosure securities law summary is great. I know we've jumped on a Zoom or even sometimes presented at some of those council meetings or board meetings. So kind of just depending what the appetite of those governing bodies is, we can tailor that, or perhaps there are particular pieces from today's presentation that you think your particular group would be keenly interested, then you're welcome to use anything from this slide deck and share it with those folks.
If I could just add on this point, it is really, really important to make sure that the preliminary official statement, when you're in the process of going through a financing, is put in front of the entire governing body, whether that's the city council or whether it's a board of supervisors or what have you. The entity is signing off as to the accuracy. I think if you were to look at some of these examples of SEC enforcement as well, where you see city clerks and mayors and others actually being penalized, again, I think part of the process that we can't overemphasize enough is that everybody within the organization see that POS, know that it's important for them to look through it. We're not asking for fly specking and absolutes, but they should certainly be familiar with it, and to the extent they have any questions, they should certainly raise them, or they should be raised with us as part of the due diligence process.
All right, thanks. The next question that we'll tackle, and this might be about take us to the end, is on audit timing and new offerings of bonds. So Jennifer talked about audit timing with the continuing disclosure piece. We also have audit timing issues when an issuer is issuing new debt. So say someone's right now, an issuer is getting ready to go to the market with a public offering, but their FY23 audit is not yet done. And so what would be used in that offering document is June 30th, 2022 information. So, approaching 2 years old with that information. And so that's where I think your finance professionals, the underwriters, municipal advisors, everybody starts to, pay more attention, because the financial information being used is now getting a little bit old. And one thing that you'll notice in a lot of those cases is we recommend and include the AFR for cities, for example, that's filed with the state. So we would at least have some June 30, 2023 information in that example. And the SEC has made it clear that those types of filings can be found by investors. Maybe they're not very often, but they can be. And so we'll just go ahead and put that in the offering document as a way to freshen the financial information. But I think that one key there is for the issuer, to be making sure that they don't expect any material surprises, differences in the financial information from one year to another in those circumstances. And then, of course, when the audit is available, it should be filed very, very promptly on EMA. Dave or Jennifer, anything to add on that aspect?
Well, I'll just add two quick things. So the staleness of receipt of audits is becoming a real problem. And many of the folks on this phone have their audits done by the state. We're also fully aware that it's very difficult, if not impossible, to find private entities that will do governmental audits. So it's a real problem, but you know, it to the extent that there's concern about the cost to get an audit, I would submit and have you speak to your financial personnel, your third-party municipal advisors and underwriters. You know, I think everybody in the industry right now would say that it's costly not to have up-to-date audits. Again, you have to understand investors out there are looking at hundreds, if not thousands of deals or have availability to purchase bonds on the market. So to the extent there's stale financial information of an entity, it's not a positive. We do then have grave concerns that when your audits are stale, staff is certainly taking on some responsibility to make sure the financial information that is being provided doesn't have material misstatements or omissions. So it's a problem. I will tell you, we talk a lot about it. We don't have an answer, but it is certainly something I would ask everybody to focus on and really push your auditors and consider whether you still use the state as your auditor and whether you try to find an independent third party. The other thing I would just say about audits, so we talked about material events to file. You need to file your audit within 10 business days when it is received. We do get a lot of questions, and we also scratch our heads on occasion as to when is an audit received to start the 10 business days to determine whether you're filing your audit late. I would suggest the easiest standard protocol is to start having your governing body, city council, board of supervisors, actually approve your audits. And the reason that's important is it seems to us that the approval of the audit by the governing body is the point at which your 10 business days would start to commence, and it's a much easier time frame to determine whether your material event filing is late. If the governing body doesn't go through the process of approval, which, by the way, just seems like good protocol anyway, that ultimately the governing body sign off. But to the extent they don't, then we have to tackle the issue of, was the audit received on day X that it was received by the city clerk? Was it the date on which the city clerk forwarded it on to the city council? Was it the date that it was sent by the auditors and may not have been seen by the audit by the city clerk for some period of time? And so you can see that the demarcation or the point at which the 10 business days starts to toll can become really sort of difficult to discern in determining, is the filing of the audit 10 business days late, because the commencement or the tolling of the 10 days can be pretty hard to decipher. If the governing body actually approves the audit, which again, I think is just good practice, well, then at least the start of the 10 business days is quite easy to discern. It's the date that the council actually approves the audit.
All right, thanks. It looks like we're right up against our hour. And again, thanks everyone for joining us. We hope this is helpful. And as always, if you have questions or specific items you want to talk about, reach out to the attorney that you normally work with, and we're happy to walk through those items. Thanks much. Have a good rest of your day.